Funding Circle has emerged as a significant participant in the financial landscape by offering a cutting-edge platform that facilitates the connection of small and medium-sized enterprises with investors. Within the scope of this video, we will delve into the inner workings of Funding Circle, examining the fundamental elements that are responsible for its operations and who contribute to its success. The peer-to-peer lending network known as Funding Circle was established in the year 2010, and it is designed to facilitate loans to small enterprises. Businesses who are in need of financing are connected with individual and institutional investors who are prepared to lend money through the platform, which functions on the idea of connecting parties. This method not only makes it possible for businesses to obtain finance through new channels, but it also gives investors the chance to diversify their portfolios through the addition of alternative investments. Registration and application process. To be eligible to take part in Funding Circle, businesses are required to go through the procedure of registering and applying for the program. The provision of vital information regarding the company, its financial health, and the purpose for which the funds are requested is required in this regard. An exhaustive screening procedure is utilized by Funding Circle in order to evaluate the creditworthiness of firms. This ensures that investors are provided with a certain level of reliability. Credit assessment. One of the most important aspects of Funding Circle's operation is the mechanism that it uses to evaluate applicants' creditworthiness. In order to determine the level of risk that is linked with any company that is looking for funding, the platform makes use of sophisticated algorithms and data analytics. To establish whether or not an applicant is creditworthy, a number of factors, including their credit history, financial statements, and indicators regarding the performance of their firm, are evaluated. Performing such a thorough evaluation not only serves to protect the interests of investors, but it also makes a contribution to the platform's overall health and well-being. Investor onboarding. Individual and institutional investors that are interested in deploying their cash for returns are the target audience for Funding Circle, which is located on the opposite end of the spectrum. To participate in the platform, investors will need to first register, then go through a verification process, and last, put monies into their accounts. Once their accounts have been established, investors are able to search through a wide range of companies that are looking for funding and select the ones that are in accordance with their level of comfort with risk and their investing plan. Loan listing and bidding. Businesses that are able to successfully complete the credit assessment process are featured on the platform available through Funding Circle. The listing for the loan contains information about the company applying for the loan, the reason for the loan, and the interest rate. Investors are able to look through these ads and submit bids on the loans that appear to be intriguing to them. The process of bidding is competitive, and there is the possibility that numerous investors will provide contributions to a single loan, risk, and returns. Investors on Funding Circle are subject to varied degrees of risk, which is determined by the creditworthiness of the companies that they choose to support. In order to entice investors, businesses with a higher level of risk may offer higher interest rates. Nevertheless, these enterprises also come with a higher probability of defaulting on their loans. On the other hand, enterprises with reduced risk may produce smaller profits, but they are more reliable investments with more stability. One of the most important aspects of the decision-making process for investors on the platform is finding a way to strike a balance between risk and return. Loan funding and issuance. After the total amount of the loan has been fully funded through the contributions of investors, Funding Circle will then issue the loan to the firm that is borrowing the money. Following the establishment of a predetermined payback schedule, the funds are moved from the accounts of the investors to the management of the company. Through the use of this procedure, businesses are guaranteed to obtain the necessary funding, and investors are assured of beginning to receive returns on their investments. Repayment and monitoring. Businesses have a responsibility to make consistent repayments in accordance with the timetable that was previously agreed upon. In the event that a business is unable to meet its obligations, Funding Circle will deploy a collection process and will actively monitor the performance of the firms. When investors receive repayments from firms, the repayments are dispersed among the investors, which provides them with a consistent source of revenue. Secondary market. Through its secondary market, Funding Circle provides investors with the opportunity to sell their loan components to other investors. It is possible for investors to require access to their funds prior to the conclusion of the loan period, and this offers liquidity to those investors. Certain characteristics govern the operation of the secondary market, and the values of loan components are subject to change depending on the demand in the market as well as the perceived risk that is linked with the loans available. Fees and revenue model. In order to create money, Funding Circle charges fees to both investors and borrowers. These fees help the company earn revenue. Investors are charged a servicing fee that is depending on the amount of the loan balance that is still outstanding, and borrowers are required to pay an origination fee, which is a percentage of the total loan amount. The dual income model that Funding Circle utilizes enables the company to maintain its operations while also continuously improving its platform. It is the peer-to-peer lending platform offered by Funding Circle that has completely transformed the landscape of business funding. A dynamic ecology that is beneficial to both sides has been developed by Funding Circle. This ecosystem is built by linking enterprises who are in need of financing with a varied spectrum of investors. As a result of the platform's comprehensive credit evaluation, open processes, and emphasis on risk management, it has been successful in promoting financial inclusion and assisting in the expansion of small and medium-sized businesses. Funding Circle is expected to continue to have a lasting impact on the financial industry as it continues to develop. This impact will likely shape the way in which enterprises obtain funding and investors decide how to use their cash.